Hello everyone, it's nice to have you here. I'm Josh. In today's episode of our series of explainer videos, How the Platform Works, we will focus on a new interesting topic. We will try to decipher some investing terms that could come in handy when trading CFDs on the IQ option platform. But before we start, we would like to thank you for your interest in our recently published videos. Please feel free to comment on our videos, share your trading experience with us, and provide your ideas on how we might improve our product and service. We do appreciate your feedback and are always glad to hear from you. Okay, let's start expanding our trading vocabulary together. The first term we'll talk about is assets. Assets are usually defined as something that a company or a person owns. Assets may be used for paying debts or for receiving additional positive outcomes in the future. When we speak about assets in trading, we mean things like stocks, commodities, currency pairs, or bonds that are subject to exchange on financial markets. Assets form an investment portfolio, our second term for today. An investment portfolio is a collection of assets that you hold and operate, with the expectation of generating positive outcomes in the future. Depending on your risk tolerance, you may look for long-term investment opportunities, or choose to invest in the short term by opening positions that last from several minutes to days or weeks. In other words, to carry out an activity that we know as classical trading. Many experienced investors tend to diversify their portfolios, which means expanding the range of assets they hold. The logic behind diversification is simple. If you put all of your eggs in one basket, you depend completely on one investment, and in case it is unsuccessful, the risk of losing it all becomes inevitable. That's why diversification is considered to be one of the most important risk management techniques in investing. When we speak about assets, we will need to know their price. And here we approach our next term for today, ask and bid. The ask is the price at which the seller may be willing to sell an asset, while the bid is the price the buyer may be ready to pay for the asset. When it comes to trading on the IQ option platform, please remember that the average price of an asset is calculated using the formula ask plus bid over 2. The difference between the ask and the bid is known as a spread, our next term to decode. A bid-ask spread is a characteristic of assets that are traded via contracts for difference, CFDs. You should keep in mind that spreads vary from broker to broker and can be higher or lower depending on the asset price. We've just mentioned CFDs, a very important term to know when trading with IQ option. What are CFDs? A contract for difference is a type of trading instrument that offers traders an opportunity to buy or sell the underlying asset without actually owning it. For example, via CFDs, you may trade shares of the most distinguished companies in the world without physically owning these shares or investing in these companies. When trading CFDs, you speculate on where the price of the selected asset will move, whether it will increase or decrease in relation to the opening price. If your speculation is correct when the trade is closed out, you will receive the relevant outcome. The bigger the difference between the opening and the closing prices of your trade, the bigger the outcome. If your forecast turns out to be wrong, you will incur a loss. The bigger the difference between the opening and closing prices of your trade, the bigger the loss. On the IQ option platform, we only offer CFDs. Therefore, you may trade various assets via CFDs, stocks, commodities, currency pairs, cryptocurrencies, indices, and ETFs. To be able to better manage risks while trading, many traders activate the stop-loss order. It is especially useful when you don't have the opportunity to constantly control your trades. A stop-loss is a type of order that closes positions automatically once a designated level of loss is reached. If the price of the selected asset moves in an unfavorable direction and the trade incurs losses, a stop loss is activated and prevents a trader from losing the entire investment. To enable the stop loss feature on the IQ option platform, click on the Auto Close button above the buy button in the right-hand side panel of the chart before opening a new position. Trading positions may be long or short. When traders buy assets at a lower price with the intention to sell them later at a higher price and make a positive outcome on the occurred price difference, we say they enter long positions. However, if a trader finds opportunities, for example, in a falling market, believing that the price of the chosen asset will decrease in the future, they may open sell positions, which in trading is known as going short. Short selling means selling an asset without actually owning it. We've just highlighted that some traders may search for opportunities in falling markets. Often, market conditions where economic performance is weak, stock prices are falling dramatically, 20% or more, and investor sentiment is negative, are called a bear market. While conditions where the economy is growing, share prices are rising, and companies' profits are increasing are known as a bull market. If investors are optimistic and expect prices to go up, their sentiment is characterized as bullish. If they are pessimistic about a market and expect a price drop, their sentiment is called bearish. Bullish or bearish? What is your mood today? Tell us in the comments to this video. And don't forget to like and share it if you found it practical. Also, subscribe to our channel and hit the bell to get notifications about our upcoming videos. Oh, and one more thing. In the video description, you will find a link that provides you with immediate access to a free demo account on IQ Option. The demo account is credited with $10,000 in virtual funds and allows you to explore the IQ Option platform, practice your trading skills, and enhance your trading approach before you decide to invest real funds. Thank you so much for watching. See you next time. Bye.